Happy Sunday, everyone. The stock market, of course, is closed, but crypto never sleeps. So I'm going to talk to you about the incredible technicals that I've found when studying the Bitcoin chart. I think you're really going to like what I see about just how early the supports and resistances have been found and where we find those gaps, where we could find those rapid rises or rapid falls in the price, setting up the next opportunity. And I'm always looking for more opportunity, and you guys can see that by using the link down in the description for the Discord. Go ahead and click on that, sign up. You'll find me and the other panel experts over there, along with thousands of members in the best community that I've ever found, along with tons of other products and services. I'll tell you more in the video later on. So for right now, let's get into the chart. So right here, this is the first thing that I want to show you. And, we got a lot of pretty rays drawn on here, if you will. So all centralizing from this same point, going all the way back to November of 2013. So we're going back over 12 years in history to talk about the supports and resistances for Bitcoin. Now, mind you, by 8 years later, by 2021, April of 2021, so just shy of 8 years actually, what we see when we do that, if I put the chart up here, is that what you'll see if I move along here is little blue dots that pop up. As a matter of fact, let me do that so you can see as I go over the rays, you'll see these little blips pop up that show you different points where we actually connect with just this rapid rise that you see through 2018. And if we go a little bit forward in there, that takes us into 2021. And without drawing anything on here after, there we go. This is actually April of 2021. As I've mentioned, look at the price action that follows and just how well we've actually come into line with these rays that are on here and where we find those supports and resistances. Now, you might argue through this middle part that there's so much density that of course they're bound to hit something. They're bound to look like they stop somewhere. But as we move forward and they spread out more, we just keep on hitting these rays that you see on the chart in front of you. And this takes us all the way through 2024. So we're actually getting into fairly recent times. And it's not until, well, let me see here, December 24, January 25. So the 2 months that we actually hit peaks up above this top ray that we have here. Well, I guess we peaked above it in November 2024 as well. So we are into recent times, present day times. And look at this gap in between that you have and how freely the price moves in there. Right now, we're like, oh man, where exactly should we go with Bitcoin? Well, you always want to bring in other indicators, and that momentum's a big one. Volume support is also huge because that can signal when we have that next big moment happening. If we look down at the weekly chart from here, you'll see a lot the same thing with a little bit more detail about just how much chop we can get in between the rays that are drawn on here for you. Again, from November of 2013 through April of 2021. Now, we actually don't get a new ray until this most recent peak that we've had. Actually, it's this peak right here in December of 24. And if I put that one on there for you, there we go. We can include that into our technicals. And well, what else do we have? Well, right now, as we see the prices rise, going all the way back through March of 2024 till present, we generally have upward movement in the prices. Momentum's falling for us. So could we fall? Well, last time we tried, we hit this ray and we found support, but we did not make it up to the next one. So right now we haven't made it up to that ceiling, so we might fall short of it. We might find ourselves retesting the floor. If it does fall through, well, you guys can see that that brings us down to the mid 60s. Down below that, if it falls through that floor, it takes us down to the mid to low 50s, which these are all moving upward. They're positively sloped over time. So the longer it takes us to get there, the more it moves up the floor for it. Now, you can't just use a single indicator. I've already taken the RSI on the weekly chart and these rays and started combining them. You can also look back here to when we had this massive head and shoulders taking place. And if you draw a trend line that goes across this for the neckline, we have a rejection once, we have a rejection twice, followed by the massive sell that took place. So you can always combine technicals, but this sort of chart might help you out with establishing where exactly those entries are, those exits are, so you can count it in your due diligence. Now, if I start putting things on here, such as a Fibonacci retracement for the history of the Bitcoin pricing that I have on here, we're only down at about the 23.6. Where's the next stutter point for us? The next Fibonacci retracement level, it happens to come at 67.5, which from where we're at right now can coincide with this other ray that we have coming up across and these previous peaks that we have getting us into this area of chop. The 50% fib also through all that chop down at $54,500 per BTC. So it's possible that we stay up here and that this floor holds for us. And if it does, then we got to retest the ceiling again. It's also possible that it falls through and then we find ourselves through a lot of support that we'd really have to try to push down below this chop, below these previous peaks to actually take us down to that 61.8. And the thing is, if you move this point that I have up here for the Fibonacci retracement, if you track that over time to the previous peaks, so going back here from the low where Bitcoin was $2 per token or $2 per BTC, whatever you want to call it, going from that $2 up to the peak, what you'll see is we used to retrace back to the 78.6, which would be very painful for us, about $23,000 per BTC. I think with the ETF adoption, with the inflation hedging that we have for it, and the retail excitement, I don't see us pulling back that far. Honestly, I think that the incredible opportunity, like the once in a lifetime next thing for Bitcoin, would be that 41.7, almost 42,000 per BTC. I think that our major support, our massive support, happens between 0.5 and 38.2. Right now, still being decided on. And you could use things like Fibonacci extensions to talk more about that, especially locally. But something else that I've done for you is that if we actually put on the Fibonacci extensions over time, there we go. I think I just want these for right now. There we go. We'll put those up on screen for you. These are just the whole number values. So no 0.236, no 0.382, none of that. It's all 1, 2, 3, 4. And what it is, if I can isolate this a little bit for you. So for this movement that we had from down here at this low up to this peak, that would be one full movement from the baseline of down here. So that next full movement then taking place from that level. So we'll go down to the low of June of 21. That'll be the last Fibonacci extension that I put on here, just to keep it a little bit cleaner for you, just to show where exactly that could take us, what it's been affecting so far. Let me get a reset view here. And you're going to start to see a big old tangle. But what I want you to pay attention to is where we start to get the clustering of these Fibonacci extension values and this Fibonacci retracement start to build up. And what you see is that right now we actually have a fairly strong area of support taking place where we start to have a whole bunch of those lines stacked together. It's going to serve as a really nice area of support for us. It's a pretty mean area of resistance if we fall down through it. So if this ray fails to hold us, fall down below that into this black area that you have in between. I'll extend that out so you can see a little bit better. This gap that's in here, that would be a free fall for us down to about 68,000. So we wouldn't be watchful for that. But once again, you start to have a coincidence of the extension of the retracement of this ray coming up through here. So that would also probably go along with this movement that you have from peak to trough here before retracing back up a fair amount. If you were to extend that as well, you'd most likely get one full movement. Let me actually slap one up there for you just real quick, and I'll put it in red so it stands out from the green ones that we have on there. There we go. And I said that I'd turn it red, so let's turn it red. There we are. So when you do that, when you go from that peak to the trough, one full movement actually takes us down here, wow, to 56,000. So if we get that repeated movement down that way, that's what you would have. And about half of that, 50% retracement, would then take you around the mid to low 70s, which actually coincide with these peaks that you have over here, which I'm going to take that off because we want to try and keep things a little bit cleaner. Now, if I put up the rest of these, the other confirmed Fibonacci extensions that we have, we actually build a solid case going on here. As a matter of fact, let me really amp up the green on here so that you guys can see it. One more. There we go. That's the one that we want. And we're going to take all of these and turn the opacity up to 100 so they really stand out on your chart. There we go. So now you can start to see just how much clustering we have. And these dark areas that are in between are where we get those free rises and free falls. So you can see in between here, turn off the magnet, turn that, there we go. This chop that we had in here, we are in between two clustered green areas, and also down below here in between clustered areas for what we could have for that price action. There was a lot of just empty space in there before we got to this next one. So what does that look like from where we're at right now? Well, right now we're in the very midst, all the way down to about 73,000 up to about 83,000. That's all support for us. That's very thick and heavy support, and it would land us right on top of the previous peaks that we saw going back into March of 2024. And then we have a little bit of free fall, but not too much. So we would jank our way down if we're going to fall on this thing, making me believe that most likely, unless we had a significant momentum catalyst, like a mass liquidation or something like that, we're probably good down to the 50% Fibonacci retracement level. Now, to the upside of this is where it starts to get exciting, because I do believe that we're going to see that upward movement over time, that when we start to talk long term, just take a look and see how much empty space we have as we get to the upside of this. Now, we momentum will actually absolutely blast through resistance and support. So when you see those big volume moments, expect those resistance areas that we have, whether it's trendline resistance or Fibonacci extension resistance or retracement resistance. We're going to blast through probably a couple support and resistances when that happens, and we see lots of evidence of that taking place. You see the big volume back here, and so we push through a couple different regions of resistance on that way. As the volume starts to taper off, we get to the overbought territory, and then it starts to get harder to actually break through that resistance, and so we get a lot of rejections that follow. Once again, we have more subdued volumes. We're down bearish territory with the weekly chart. When we go to daily chart, we're down below near 50, so sort of sideways, but a little bit down, if you will. It could still go in any direction right now. But looking at the daily chart here, look at these areas that we find. We could easily get that momentum, that massive volume movement that pushes us up above these. If we can get up above 122,000, we easily have room up to 137,000. And then just breaking through that's going to be tough. We have so much knotted up there from 137 up to about 140. Nice jump to 147. And then you can see 147 and 154. So we start to get more area as time goes on, and we could most definitely keep on bumping along there. And every time that we get a new peak, as long as this peak back here, let me take down this mess that you see. We can go back to the rays that we originally talked about. So we'll hide those. We're going to hide that. And we're just going to take a look once again at the rays. There we go. And let's also go to the monthly chart to really take out some of this noise and you just get a nice clean picture of the chart. As long as this peak back here can see the new peak, well, then we start to get more lines drawn on here. So this line right here took until we couldn't even see anything on the chart up until we got those. And you can actually draw a few more that were on there. If you're going to be really picky about it, maybe talk about this monthly peak that we have right here as well. Get another line going in between. But these are the ones that we can see from November of 2013. And the last, we'll say, line that I could see over, last mountain that I could see over before I could see the next mountain happened in April of 2021. So for Bitcoin, what exactly does it look like going forward from here? If we happen to have that mass liquidation moment, I think that 50% retracement, based on the history of what we've seen, that 38.2 down to the 50% retracement level would be ones that I think that we would get to. I think we'd be very, very, very hard pressed to get down to the 61.8. And the thing is, about the further we get down there with mass de-risking, if that were to happen, it's exactly what I just said it was. It's de-risking, in my opinion, especially with long-term outlooks on Bitcoin. And we have things, don't forget about this, please include it in whatever you do. So the Sovereign Wealth Fund for the US, developing within the next 12 months, according to the Trump administration. If that is happening, they're going to look for dirt cheap values because buying it then makes a lot of sense from a business perspective, from a monetary perspective. It doesn't make a whole lot of sense to buy at the top. The prices are coming down. We want to watch those prices coming down. And then there's also being the crypto capital of the world and looking for an excellent opportunity to get in there. If you can squish down the crypto prices to really jump on the bandwagon at depressed valuations, if you will, or in this case, really depressed value where we retrace down to the 50%, 61.8, or holy cow, if we went all the way down to the 78.6. I would say any one of those, I would say below the 50, people are going to talk about how dead crypto is, how it's never coming back. And that'll just be the next thing that makes those millionaires out there who still see that long-term potential in it. Because honestly, I don't think that Bitcoin's, I think it's too well established. I think there's too much belief in what can happen. And it's sort of kind of sort of like the AI arms race in a way, if you will, that people just need to keep on competing and need to keep on staying part of it in order to keep that value exactly where it's at, that it is working out so well as an idea for an inflation hedge that so far until that idea gets broken, it's still probably going to hold out. I think that's one of the reasons why it's helped as much as it has, is I just don't think people are ready to sell. And honestly, maybe they'll never be ready to sell. But if a liquidation can be forced and they're forced to sell, or like if they're over levered or something like that, that can definitely be something that takes place. So to the downside, 38.2 or 50, I think is where we're going to live. I think either one of those is going to bring with it incredible opportunity from where we're at right now. I think there could be a near-term sell coming for Bitcoin. And I think overall, as the dust settles, I think that's when we put in those new all-time highs and we could start to see that price climb up to those high 130s. And if we can crack 140 solidly with good momentum, if we can get up over that 140, then we're really looking shiny up above that value. So we have some support, some resistance, and now we have some things to look for as well. So I hope that you guys found this video informative. Like I said, if you want to see more of my technicals, see more of my analyses, see the other panel experts analyses and trades that over at the Discord, that link is down in the description. Click that, sign up, use the code word CASH to save 50% on your first month. Also down in the description, find that link for Stockmo Academy if you want to learn about trading using technicals and also technical analysis itself. And there's also a course there for options. You can bundle them together, save a whole ton. You can save even more if you use the code word doctor when you sign up for those courses, DOCTOR. Thank you guys for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.